Very well. Here we are. Very well. Thanks a lot for joining in. I'm opening the chat as well, so I'll be able to interact with you. Thanks for joining in. I hope you had a great weekend here, and I surely had. Of course, as usual, it's too short, and so welcome and let's start this new week here together. It's going to be exciting. Thanks a lot for following and your beautiful and nice words you had last week. This week we hope to do even better, and thanks for joining in. So the Sunday session is very, very important. And by the way, today is Sunday, the 7th, February the 7th, 2016, and it's 8:01 p.m. Thanks for joining in. Hello, everyone. Hello. Hello, Pankai, FX Ambassador. Hello, Pantelis. Hi, welcome. Roland, Jax. We have Becktan as well, Craig. There is me and Desi, and thanks to FX Street for organizing this. As usual, I'm not sure if I see everything, because the other day, someone of you, and thanks for that, you sent me the list of questions that were actually on the screen. I couldn't see them. So, as usual, if you have any questions, you can write them down. And as you know, I never shy away. I'm very happy to answer, learn from you, and be challenged, and uncover opportunities for this week. This week is going to be very interesting. But before we get into that, let's remind that you are listening to and seeing and watching the FX3 Tokyo Open Live Room. It's a daily show from 8 p.m. to 9 p.m. EST, and it's obviously dedicated to Asians, as well as Australians, New Zealanders, and of course, all the Asian world, but also I would say the North American world, and South America as well, as we actually go live at 8 p.m. EST. That works very well for Central Time, and also for for Eastern Time and Central Time. So thanks for joining in. This is the daily show where we feature real trading at the very heart of the Asian session with me, the FibStalker. I'll be your host in this and all the others. So let's get into the disclaimer very quickly here. Trading is risky, so trading Forex and its derivatives, futures, options, and CFDs, and other instruments for retail off-exchange transactions involve substantial risk of loss, and it's not suitable to all investors. You may lose all or more of your initial investment, because leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FX Trade risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information in this webinar is provided for educational purposes only. Me, Giuseppe Basile, FibStalker Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investments by attendees as a result of any information in the webinars. Okay, so this is very important, but obviously what we want to do. Hello, Scott. Hello, Jax. I see Pank. There is Rusty as well. Thanks for joining in. I see Pank has already a question there. He's always firing. He's already firing off on all his cylinders. Very good way of starting. So let's actually dive into this market here, and let's start analyzing them and see what they can bring this week. And for this, I will actually need the chart. So bear with me 1 second here, and let's share the chart. So So here you see the charts, should be able to see them, and I also have the chart here, so I can actually look at your questions. And Pankaj is saying, Australian US dollar participated on a weekly level last week on your radar. Very interesting question. This week, almost everything is on my radar. I mean, there's so many opportunities around. I mean, it's unbelievable. And for those of you who will see me then at 2 a.m., we'll do a full review and see and look at all the opportunities we have. But this is an interesting market here. I think this market, and this is the Australian dollar, US dollar, has to retrace into the old way of way back here. So it's just a matter of how it's going to do it. So, if the market retraces to previous highs here and then moves lower, there will be an opportunity. And so there may be an opportunity here for maybe 150 pips here if this market continues higher. Okay, so that's what we see there, Pankaj. It's an interesting market, and I want to talk a little bit about, of course, our beloved Australian Canadian dollar. Thanks a lot for your comments and nice work, nice words in relation to this move here. You're allowed, Pank, but I'm not gonna answer on specifics of the FibStalker methods, as you know very well. So, I would ask you maybe not to do that. We can review those later. There is no rush here. I mean, this market just opening up at this stage. I would focus more on the I'm focusing more. I would focus more on the analysis for this week. So I think that's more important to see what's going on rather than just diving it and looking at the actual opportunities here. Of course, US dollar, Canadian dollar so far has behaved as we were anticipating. So that I'm very bullish about this market, and if you look at the previous history, there are very good reasons to be bullish about this market. And as I mentioned last week, I anticipate this market to get, believe it or not, at 158. And that's what I've been saying in the last 2 weeks. So there's nothing new here, and we knew there was this potential for this participation as since a few weeks here. So I'm not going to. I'll just try to. I have 2 positions long in this market, and I'll just try to take any opportunity the market gives to continue moving higher. This market could be in extensions on the 4-hour time frame here. So this at the European Open, or even at the tomorrow at the US Open, this market could actually continue higher. And FX ambassador saying US dollar, Canadian dollar should go up. There are also good fundamental reasons for that, but sometimes technicals have already confirmed or are already confirming that move. So I'm very happy about this move. I think it's also confirmation of that when we do a good analysis work, things tend to follow up. So it's very, very important to do a good analysis, especially at the beginning of the week. And I want to jump then into the 4-hour euro dollar here, because I think that this market is potentially giving an opportunity here. This market has already traded this extension on Friday, and there could be here an opportunity to take this market to for a continuation higher. Okay, now it is maybe too early here. This market could actually continue from here, and we could just lose this opportunity. However, I'll be a little bit more prudent here, because there's no rush to get into this market, and I will wait for a retest of this 111 during the European Open. If we get a retest, a successful retest there, I'm going to get long that this market, okay, and that long is going to be for a little bit there, probably into. Let's see if I have this level already traced somewhere where the I don't want to jump around from one place to the other, but let's see if that level works. We're going to see probably you're probably going to see 114 here, 10 around these highs here, okay. And so it's not a bad opportunity. I just we could enter now with a stop below lows, but still early, and of course the European players will want to get we want to get a piece of this. Actually, maybe they entered at the closure of the European session on Friday, and for sure they already have a position here. But is it possible that that will come back and try to trade this level again during the night? If that doesn't happen, well, we will use other devices to enter into this trade, and maybe we will get a smaller reward to risk. But I'm not in a rush to trade. Now it's Sunday, everything's still setting up. So of course it could pull back some more, and that's always welcome, because we never buy these levels blindly. We need always confirmation. So if it has to retrace a little bit more, it will, and that's only welcome, because well, this market is also trading into short at the moment, so it could be pushed lower, but we will see what happens. It's also very extended here, so it can continue higher. So there's no clear cut there. This week I like all these markets. I mean, a lot of them. I mean, few of them, I should say. Euro Canadian dollar also, I love it. I think that if we get into 115.60, this market will just drop like a rock. And that's a level that I'm watching cautiously. That's like a hook. This starting of the week, if we get there, great opportunity to short, the market is going to drop like a rock. And it's one of those situations where I have some of the patterns that allow us to actually define a quicker movement of price. We will have a look at Kiwi for sure. I like Kiwi, as I said last week. So maybe we want to start and actually have a look at that one. I also want to take some notes, because I like to do at the end of each session a recap of what we have looked at. So far we have looked at the euro, US dollar here, and we say that this market could be moving in extension. But we cannot exclude a retest, a move lower here. I am more prone to believe that this market is going to continue higher. Of course, we had a quick look at the US dollar, Canadian dollar. That so far it's actually following the plan, and I know that Dale has also mentioned in the LAR my projection on the euro, on the US dollar, Canadian dollar. Thanks, Dale, and let me say hello to Dale, my friend here. Bear with me one moment here. Just want to pay my respect to Dale. Thank you, Dale. Hi, how are you? Hope everything is good. Hope your week will start beautifully, and of course, later on, I'll pass the baton to you for the continuation now and the start of the week. Okay, so let's get back into the charts here. So we said we reviewed the US dollar Canadian dollar, which is following the plan. And before we get into the Kiwi, sorry, we have also the US dollar Japanese yen that is following the plan. Okay, so whatever this market puts on this week, you know, it can put on a red nose. You know, it can actually dress like a clown. I don't care what this market does, but I still believe that you're going to see that 114.80 level there, which I have actually identified here. Okay, so any rally in this market this week, it's to me an opportunity to short. So I know that there are some people who are seeing previous lows here. Don't fall for this kind of things. There's no real support below those levels. Okay, and now I hope you start trusting me. So so let's review the Kiwi then. The Kiwi, it's a market that I like very much actually, because it actually has confirmed actually has confirmed the second test of the weekly level, which is exactly what you see here. Okay, so of course you want to try to take an opportunity to try to go long this market, and this market could offer an unbelievable move into 0.75 here. So any opportunity this market is going to give us is going to be very, very welcome. Unfortunately, you know, let's see what this market could offer here, and see whether whether it's going to, and where it's going to retrace. I think this market has to retrace the all the way halfway back here, 50%. That would be a safe bet for this market. So I would wait. I would wait a little bit to see this week whether he gets there. I mean, you know, trading at these levels, it's unsafe to me. And actually, if this market moves higher, it's going to be a short temporarily into the 65.48 here, and that would be a good entry to keep for some time. That would be a good entry to keep, actually to keep till 0.75. That would be the way I would play this. So I'm going to put a nice triangle here. Sorry, a nice rectangle here to remind us that we wanna keep a look into that 0.65. Okay, and I see that there are other traders joining here today. Craig, thanks for joining in. We have again Beckton, Pantelis, hope you're doing well. Rusty, Joe as well in. So yes, I see Kiwi going lower, FX ambassador, that's correct, but only temporarily. And temporarily, this market could also surprise you and move higher before it gets into that 0.6548. So we will see how that happens. I think from a technical point of view, this market is very strong. It's supported on the weekly, so I don't see how in the long term this market could go lower. It's not going to go lower now. It's going to go lower only short term, I believe, if that happens, and then it should actually continue higher. There is a case for short on US dollar Canadian dollar using measured move. It would need to break higher for a confirmation, in my opinion. There's always a case for a short, as well as there is always a case for a long in all time frames, right? The point is that we need to weight that with the information that we have. So Pankaj, I mean, just be tranquil. Nobody's going to happen to that US dollar Canadian dollar. If that market had to continue lower, it had all the opportunities to continue lower, and that didn't happen. So there is clear participation on the weekly time frame. This market is just assessing itself, and we know that it can be jagged after a move higher. So I wouldn't be worried. Yes, I know what you're thinking about. There is still a daily extension that is not short, that is not has not been broken yet, but it will, and we're not going to trade that short. Actually, I'm not going to do this for sure. Okay, so we'll discuss that later. It's not a big deal because I think we are golden. So New Zealand dollar, US dollar. I'll be very, very interesting in this market if we test the 06548 for a long. Okay. Thoughts on the euro Australian dollar. Let's look at the euro Australian dollar for this week. Actually, let me check my Excel here, analysis, Excel, because the euro Australian dollar, it's one of those that you know, it's a little bit more difficult to analyze this week, but we can have a look at that. For sure, I like the euro Canadian dollar more rather than the euro Australian dollar. But let's have a look at it and let's see what we can see in this market. Okay, and again, I just want to keep an eye on your question here. So euro Australian dollar, it's one of those that we don't know whether it's going to go higher or lower. And there is an area of potential participation identified here, which could bring price into that area of participation there. Okay, and I would like to see that area of participation be tested before the 158.83. We don't know if that's going to happen. Apparently, this market at the moment is not doing that, and it would actually indeed go into the 156 first and then continue higher. But sometimes, I mean, you know, the strength of a position, Scott, it's actually related to the path. So it's called path dependence. The market are path dependence, meaning that they actually behave in different ways depending on which path is taken first, believe it or not. And that's surely true for when we look at the analysis of price on modern markets with algorithms. So there is this path dependency that is actually more important when we look at this market with algos. So let me take some notes here. Euro Australian dollar, then we say that, you know, this market can go higher and then become a very good short. But if it goes lower, it's going to probably get some participation at the 156.05 here if it moves lower first. Okay. And if it continues higher into 158.83, I would actually be very celebrative, because that market would actually offer a much better opportunity to trade into that 52.33. You will remember that this is my failed trade, meaning that I failed to take profits where I should have done that. And I ended up, taking 4.5 units of risk in profit, and which is not too bad, but it is bad considering the price action. However, that 52.33 level is still looming there. That's still a level where we could see participation from the very, very large mammoth and funds and banks. And you name it. That's where, if there is a long, will come. So all this action you're seeing here, it's all action related or somehow involved due to algorithms working on the smaller time frame. It's like that this market's kind of being pushed higher by the smaller time frame. So we're not really interested in that. I just want to keep a eye here on the US dollar Japanese yen. Not that I'm anticipating anything dramatic happening in this market, but I'm just having a look at that. And of course, we have this consolidation here, lateral move, and we need to see, that market start moving below the 116.67. Otherwise, this market will drift higher for some time. I don't anticipate this to be a long here. It's rather it's rather, absorbing that and taking some of the profits for that move that we saw. On the other hand, the pound versus Japanese yen here, this market is within an area of potential support, so it is also within an area of short though. So so this market is just correcting into the next short, which is very, very close here, and so we will see how this market behaves. Am I going to short this market here? No, I'm not interested, and I will just observe in this price. We have entries at much higher prices. This is not the kind of opportunity I'm going to look here for a continuation low or a quick trade. And this short here, it's pretty risky. So I'm not going to take something that is risky. Okay, and of course, US dollar Canadian dollar here. That this market is going to have both the push from the profit taking of these large 3 weeks move that we saw, plus is going to have the new participation, long. So I'm not worried about that market at all. So I'm just having a look at those markets. So then going back then to the euro Australian dollar, this is what we sorry, let me take a note here for an opportunity long. I was taking a note on the New Zealand dollar, US dollar. This market, I believe, is a sell anyway, and also long term. You can see that very, very clearly, right? If you look at the weekly, it's even more clear to you that this is a sell. The point is, where do we sell? And that's the question. That's the only question that we have to answer, right? Can this market move higher? Or anything can happen, of course, but will it do that? He had the opportunity to go higher. Look at what happened. What has changed in the last few months? You tell me. Okay, so the opportunity was there. It was pushed lower, like very, very strongly here, and never was capable of retesting the level. I think that in the last few months, nothing has changed in the relation between US dollar, euro, Australian dollar. I might be wrong, but I do not try to interpret the market using fundamental analysis. I'm very weak in fundamental analysis. Although I have a master's in finance, and I did myself some fundamental analysis for the US dollar Japanese yen, for example, in the past. The point is that I'm not capable of, and I'm very honest with this, and actually that's that's an admission of weakness. That my weakness is not really in trying to do an analysis that is reflects reality. It's trying to put the outcome of that analysis into something which is actionable. And I'm not capable of translating fundamental observations into an entry, a stop, a plan, a trading plan. And that's my objective as a trader. To be honest with you, I couldn't care less about knowing exactly what's going on. Of course, I mean, fundamental can help, right? The problem is that to me they hinder my trade. They do not help my trade. And the reason is that I need to reconcile. It's like having an additional indicator or multiple indicators that you put on the chart, and then you have to reconcile. And and for this reason, I have a deep respect. For colleagues who actually do fundamental analysis and actually are very capable of integrating that analysis in what they do. And actually, here I want to go and share this for a minute and go back here to not to me. That's me. Hello. But I wanted to go back to the FX Street page here. I don't know if you should be able to see that. That actually that I'm sharing here, and actually when you look at this, There are great people like Yohai Elam, for example, who's he does the analysis. Hello, Yohai. I think we didn't Yohai. We didn't meet yet, but I mean, is great in his analysis of fundamentals as well as during the US session, and I have great respect for him and for the colleagues who actually analyzed the fundamentals, because I'm not that good in integrating them into my trading. But I'm good at technical, so that's my specialty, as well as studying the effects of algos on the markets. And these algos are suggesting me for the euro Australian dollar that we're going to see probably lower prices here into 151.06 and possibly lower. So sometimes knowing the direction is not enough. We need to know how to take advantage of that, and sometimes we know where the market is going to go, but we are not capable of taking that opportunity while managing risk properly. And what I believe about risk management. Risk management traders' job number one. If you watch me every day, right, and then you go home with only one idea, right? Every month, at the end of 1 month, at the end of 2 months, we only one idea that risk management traders' job number one. I think you are going to do a leap in your trading. It took years for me to do, just to incorporate this simple concept into my trading. And so this is very, very important. And we have situations like this when we don't know how and when we have to get involved. We know that we have to get involved, but we want to do it managing risk, first of all. And then we have a number of other constraints, like trying to maximize our reward to risk as well. I want to make, and you can write down if you have any other questions. I don't know if I see all the questions here again, but we can write down. I want to do a little digression here on silver. I follow silver because I think it's still a good hedge for paper money and cash. And this market has done very, very well since the mid of January. Here there was this cap here forming potentially, which could actually break price. Now, if we break 1535, I believe this market has the potential to get all the way into 1645, and then this market could form a cap with a handle. So we could see some, if we get there, we could see some some selling here into 16 or 1550, and then a potential continuation higher. So I analyzed some of these patterns that are very well known as well in my series on the continuation style, and there I analyze this pattern in a new light as well. I show how algorithms can explain basically all these patterns. Okay, so for that we need to break the 1535, and I believe it's all connected here. It's all connected to the dollar index. It's all connected to the euro dollar, gold, and of course SP500, right? So SP500, it's suffering at the moment. It's still on top of that area, and that important area that was tested for the third time here. It was tested in August. You will remember the 25th of August was 25th was the day when the Fed and the whoever wants to support this market has stepped again to support this market. At that point, we knew already that any other test should have actually brought this price higher. And then that happened again. Again, there was someone stepping in here. You can be funds, can be, there are different ways of moving the market, speech funds, actual futures being bought out of Belgium, and so on. So we don't know what's going to happen here. What we know is that it's all connected. If we break this area 1800, we're going to see gold and silver probably move higher, and dollar index moving lower, and euro dollar moving higher as well. So it's interesting to follow all these markets together. Any other questions so far, or market that you are particularly keen of reviewing here? As you can see here, the Australian dollar, Japanese yen has kind of a same shape as the pound versus Japanese yen here. They're bought into this area, and if this market will start breaking the levels of the 4 hour, 15 minutes, 4 hour, and daily, I mean, I'll have no problems in exiting my trade. At the moment, I'm carrying two position on this short. I removed some of that 50% level, as I've indicated last week, and just give me a moment here, because what I'm looking for there is, I would look for a continuation lower, but I don't know whether this market is done here or it's going to continue lower. So if long are going to participate here, I'm carrying two position here. They have so I'm carrying only one position because I removed two positions. So this is only 3.9 reward unit of risk here in gains. So we'll see what happens in this trade, which has a potential of 16 unit of risk here, if he gets at that 156 target. Are we going to see that, or how much we have to give back before we see that? I don't know. And based on how it behaves, I mean, I might change. I might take action there. High bet back time is very high, as we have expectation on Canadian and JPY. What about Canadian JPY pair? So the expectation, you're saying that we have the Canadian moving lower. If the Canadian has to move lower compared to US dollar Japanese yen, so USD Canadian moving higher, and then USD Japanese moving lower, right? We should theoretically, Canadian Japanese yen should not move a lot. Of course, the move that we anticipate is a very good question, actually. And then we're going to see. So let's make some consideration first, and then let's go and see the charts. So the consideration here is that the US dollar Canadian dollar has to move up a lot, and the US dollar Japanese yen, and that's already confirmed. Okay, and the US dollar Japanese yen, should actually move down, but we have kind of a target there that is not as aggressive as US dollar Canadian dollar. So can you see here? I'm doing just simple consideration. What are the targets that I have in mind? And I'm not doing any kind of fundamental considerations here. So considering that US dollar Canadian dollar has to move up a lot, so the Canadian dollar has to drop a lot, and the Japanese yen has to gain a little. So what I would anticipate is that the Canadian Japanese yen pair, it's already positioned for a drop. Okay, now that said, I might be wrong, of course, and let's look at the Canadian dollar that I don't even follow, by the way, because I like to look at markets that are more liquid. But now, as you see here, I was saying that it was positioned for a move lower, and that's what we are seeing here. Okay, so we are seeing this market, which is less technical than others, already broken the all the way back there and has the potential to go back all the way to previous lows around 72.65. So in a way, having in mind the targets and the way algos are moving around this market gives us an idea. And again, as confirmed, this market is actually pushing lower and has already pushed lower last week, the full last week. Last week, this would have been a great opportunity, okay? But, we cannot follow everything. And this, as well as the other markets are trading against the Japanese yen. The Japanese yen at the moment, it's relatively strong compared to basically all the other major currencies. Okay, and that's what this chart is showing as well. Can you see that, Beckton? Can you see that there is a short there, and already there was a move lower, and a potential short that has the potential to bring price into 65.62, which is more or less the level that I mentioned before. I mentioned a lower level here. Okay, so this was a good opportunity last week, and I'm not rolling around to search for markets, to search any potential opportunity. I just try to filter the best ones, and sometimes I even fail in doing that. But typically, the subset of markets I follow, it's more than enough. So moving short here into 75.62. That's the answer to your question. And this was very good actually. So we have a projection here into 65.60 area here, and after observing that, the Canadian dollar could actually drop a lot, and the Japanese yen could actually go higher. So not as aggressively or dramatically as the Canadian dollar might move lower compared to the US dollar, Japanese yen, but that gives us a very good idea. And so this also shows another concept, which is very, very important, that in the end, all these pairs are all connected together, right? So obviously. And so sometimes, trading different pairs means to trade the exact same opportunity. And so we have to be very, very careful, and that's the reason why sometimes if I see the same trade trading on two different instruments, I'll try to pick the best one and leave the other one. And I believe the fact that we follow multiple markets here helps a lot, because sometimes there are some markets that trade one against the other, like for example, because the Japanese yen trades against the euro very often, not always, but very often, and that helps us. For example, when we look at the euro here, we don't see that decision that the market would have. You're very welcome back then. So which time frame do you make your decision from? I make my decision from, it depends. If I'm looking at daily level, I will take my decision on the 4 hour. If I'm looking at a 4 hour level, I will take my decision on the 15 minutes or 1 minute. So the level I look at where the opportunity is, I scale down of one time frame and I use that for timing. So I look for opportunities on the daily and 4 hour mainly. Sometimes I look for opportunity 30 minutes, but it's not that common. And then I time them and fine tune them and time them on the 1 minute and 4 hour, where I know the algorithms are actually in action. Now, as we can see here, there is an opportunity in play at the moment. It's the pound versus Japanese yen. As I mentioned before, I'm not interested in taking this trade. This might well continue lower, but I already have a position. If it continues lower, it actually it actually adds to what I have already. And the reason for that is this is on top of a potential area of support, so I'm not going to take that trade. It's very important to what I call is the trade placement, where the trade comes from. The trade is not all they are not all the same. People don't make this kind of consideration normally, and that's one of the reasons why the majority, 95% of people lose money in the market, because they believe that everybody is the same. It's not like that. There is one concept that is called trade placement. It depends, trade placement, sorry, in the trend. And indeed the same bar in even in similar move, like move higher or move lower, have a different meaning or different probability opportunity on different time frames. So that's something very important to keep in mind. Okay, so let's see. So we spoke about Euro Canadian dollar, US dollar Canadian dollar. We also mentioned the Euro Australian dollar. We mentioned the Euro USD, and of the major here I follow, there is the Australian Japanese yen here, which is very similar to that pound versus pound versus Japanese yen, and you know, we could make the case that, you know, this market is being pushed lower, for sure is being pushed lower. But the problem of this market is that it has support on the weekly as well. So we have to be very careful here. Okay, so I'm not keen of going short this market. And I think that's more evident when you review this market on the weekly time frame. Okay, so this market is at the moment moving laterally here until it comes out of that move. I'm not gonna touch it because you know, it's very easy to make mistakes and believe that, you know, you are getting a trade with the risk you want, and then you don't even get a free trade. And the Australian dollar, New Zealand dollar here, it's pushing lower from that 169, and there's been, you know, I've noticed, I've discussed that at the beginning of the week, and there were some of the students just saying, you know, that looks interesting. And one of the things I mentioned is that this market is moving laterally, right? And when it does, it moves from the top to the bottom. The point is, you know, that's not a level we could I could put my hand on fire. I can put, you know, there are some levels I can put my hand on fire almost, like you know, the US dollar Canadian dollar. That's not something I would do in this market. Do you think we have a continuation flag on hourlies, daily, and weekly on the euro pound? Let's look at that, and let's see also if we can time that using the continuation style. Time check here as well. It's 10 to 12 to 9. So I will review this, and then I will do a recap of the show here. So let's look at euro versus pound here, which is an inter-European play. Now, when we look at the weekly here, you know, this market is actually reacting higher, but this market is a short. We just need to know where this market is going to stop. Okay, so to stop this market needs resistance, otherwise will never stop. Okay, so the next level of resistance is going to be the I believe on this time frame is going to be the 178.76, and this is a very good market. Remind me later on, guys, when we, in a couple of weeks here or more, we get into that 0.7976. Write it down. It's not one of the markets I follow, but write it down and remind me, because I might not look at it, because I don't look at all the markets. I look at 8 to 12, 14 markets, and I follow other markets as well, like dollar index or pound, sorry, or gold or silver. So, and I'm not I always try to look at only the best opportunities on the high volume markets, because that's where my edge works. So, and we don't need other markets also. We don't need a lot of markets. But remind me of this opportunity 07876, which is the place where I'm looking for. Now, before that level back then, there's not going to be anything that I'm interested in doing in this market, not even going long, right? Because one could say, okay, if the participation is there, why don't you go long? Because there are many more other markets that offer a clearer move and also an earlier move, because this is a late move, right? I mean, if we trade this continuation long higher here, right, and the setup was already given at this level, so 75, 50 levels, there is nothing to trade that. Okay, now one could say, okay, if we just look at this portion of the chart here and we go down to the smaller time frame, we could see a flag, right? Because there is a move higher, flag, and a continuation higher. And this continuation is not gonna go an equal move here. Forget it. Forget about it. It's never gonna be an equal move that goes, wherever you want it to go. It's gonna stop. It's gonna stop here. It's gonna stop at 07880, and there's gonna be some reaction at that level. So make no mistake about this, and you can come me later on and we can talk about this. But so if we go down to the daily here, we see this flag here, right? And this flag apparently has already broken here. Okay, broken for a continuation high. Of course, can you see the difference? And more than a flag, this is we can see this as a number of ways, of course, but here you can see an ascending triangle, which is a very good formation. But obviously, one could say, the reality, the choice is this one. It really depends since when you are following this market. Now, that's it. You're very welcome. That's it. We're still not finished here back then. You can say a lot about this market. Okay, and now it's very easy to trace these kind of things after the fact, isn't it? The point is, if you follow this market and you keep an eye on this market actually has given you, a second test, potentially a third test, and then a fourth test. So this trend line was real. Now, how to use the trend line is something different, but this trend line was real, and we know that this market can actually continue higher. It is also interesting to go and see in the smaller time frame and see how you see at the 240 minutes in this move here. And that's interesting because it allows us to apply the concept of, I don't know if you reviewed the continuation style on FX Street. If you have not done that, go to my line and by my page, and by no means try to do that. And the beauty of this is that in this case we don't see a lot of improvement. But what typically you see when you keep moving lower in the time frame is that in this case we have no advantage. This descending triangle has not decomposed in anything interesting as it has moved lower. For example, sometimes what you can see is that this triangle becomes very, very tiny here and actually resembles a base, and you now can use that as your entry. But even if you were using, let's say, a previous high here for the entry, this would have worked well. And if you review my notes and my latest webinar I had last week on February the 4th on on how you can maximize and improve expectancy and reliable for this kind of breakout, you'll be surprised. You'll learn a lot there, and you'll be surprised of how much you can increase the reward to risk as well as the expectancy. And we saw that there is a 117%, so 110, you can say 100% of increase in reward to risk and in profitability as well. So that's something definitely to look at. And if you're using a free trade, in this case, you would have received a free trade as well. So pretty interesting there, pretty interesting study. Okay, so it's 8:55, so I'll start a recap of this session here. If you have any other questions, bring them tomorrow. Tomorrow we'll be here again, and it's going to be an exciting week, every week. Not because I'm excited about the market, but I'm excited about the opportunities. And then, to me, the market it's very much reasoned. I mean, we have to reason on the market and see what the market is actually bringing to us. So I'm not excited by the opportunities or the way when the market set up. So I'm very excited about the way it's possible to analyze this market and identify levels well in advance. And I see a lot of levels this week that can be of interest. So I think that there are going to be good opportunities. And in any way, I always try to target 4 to 5 units of risk per week. So that's that's what I target. Sometimes I make less, sometimes I make more, sometimes I make way more. I mean, if the setups work. So that's the objective there. So let me start then a quick review here, and I will follow a quick recap here, and I will follow the notes that I've got here. So we reviewed the US dollar, Canadian dollar very, very quickly. We noticed that was that participation, a very nice bar we had on Friday, which is an indication of strength and participation, of course. Of course, if you were only looking at the market as it was showing on at some point on Thursday, we would have seen this market at 136.38, this red bar, full red bar. So one could have thought, okay, but the FibStalker, one of her is saying, I mean, this market is just moving lower. But then, that's exactly when we have to be aware that maybe participation on the weekly time frame, and there was that day, basically almost full reversing that bar, producing a hammer or a tail bar here, a Pinocchio bar, as Martin Pring would say. And then there is the full participation and reversal of a profit taking on Friday. And now we are moving on strength here. So this market could just keep moving in extension higher. So very well done there. We reviewed the euro, US dollar, which has reacted to that level that we have shown on and we mentioned this also on Friday. So if you also on Thursday, so if you want to review the way we timed this, you can have a look at that video as well. I believe this market is going to continue in extensions, and we might see previous high 114.14, 114.10 here. Okay, and that's what we're going to look for this market. If this market is going to retrace, it's going to retrace a little bit lower into 110.20, and that's again still an opportunity to go long. We then reviewed, of course, the Japanese yen, US Japanese yen. I mentioned that whatever retrace we get this week, I would not be worried. We go as high as 118.07 or 118.49. I'm not going to get panicked, even if I have to give back some of the profits. And I think that is a very good opportunity for this market to continue. If I'm wrong, I will take my profit at 119.01, and I'll be more than happy with that. Okay. New Zealand dollar, US dollar. We reviewed this market. I mentioned that I very much like this market because it has traded on top of weeklies. There is weekly support for this market. So in this market, we are just going to wait for a good opportunity to enter long, and there is a potential for 0.7521. If this market keeps moving in extensions, that's going to be a little bit more difficult, but I think I'm showing my face. I'm not showing the charts, and that's not good. So I'm gonna move back to charts. Certainly not interested in my face here. So we said weekly as traded longs here, and so any opportunity to move higher to actually participate in this market. Hopefully it is not going to trade in extension. We can take that and try to bring that into 0.7521. If this level is retested again, or 63.70, very, very unlikely, but if it's retested again, another good opportunity to get long. Then I was asked the euro Australian dollar, and we reviewed that market, and I mentioned that the euro Canadian dollar is indeed a little bit better, but this market actually can this market actually can sorry, let me show that to you. Euro Australian dollar, and here we go. So this market can actually, we know that it's going to retest 151.64. I mean, it has been rejected. Shorts have rejected that market. Longs are not participating. It's just a matter of how much higher it has to go before it drops like a rock. And I traded this last week. I didn't, maximize the opportunity here, but still it was a good opportunity, and I look forward to short this again. And finally, you asked me to review the Canadian versus Japanese yen. There was a nice discussion there. I mean, well, I discussed with myself in reality, but the main idea there is that, as the Canadian has to go lower compared to US dollar, and the Japanese has to go higher a little bit compared to the US dollar, then we were looking for a market that was already positioned for a short, and indeed, the charts confirms that. And then last week we saw 86.14 trading, which is going to push this price lower into 75.62. The best way to get advantage of this level is to learn the FibStalker method. So my invite for you, I'm going to do a special edition of the FibStalker methods in May. It's going to be my fourth session. So I have a number of students who are already well positioned, and they've been studying. Some of them have been studying the methods for almost 1 year and a half now. So if you want to be part of this of this group, by no means there is a link on top of this video, and you can just contact me if you want to know more about this. And I don't know till when I will continue teaching the FibStalker methods. You can see here some of the activity here, teaching as well. The course is going to be online, and there is a great 24% off on the coaching program on FS3. So if you are interested, it's a full program that drives you from the mechanics of trading up to writing your trading system using the FibStalker methods. And actually, I also give away 7 trading systems. And then it's complete with a series which helps you build in consistency and profitability and consistency. So it's a complete approach to successful trading. And if you're interested, just let me know, and I'll teach you. I'll be very happy to teach you how to trade like modern algorithms. Okay, so this is it for today, for this start of the week. I hope you enjoyed this initial review. There's a lot going on this week. I think this week is going to be very, very interesting. I look forward to get tired and be there at 2 a.m. as I do the first 3 days of the week. I cannot do 5 days a week because, you know, I simply don't have the energies to do that. But 3 days a week is more than enough, especially at the beginning of the week, because that's where the opportunities kind of cluster or appear to be together. So thanks a lot, very much. Thanks for being here. I'll see you. I'll see you on. I'll see you tomorrow, same time, 8 to 9 EST here on FX Street. And thanks for joining. And bring your questions and bring your pairs. And we're going to see how to take advantage of the opportunities the market is going to offer this week to us using the FibStalker methods, as well as the continuation style. So thanks a lot, and I'll see you tomorrow. So I'll leave you here with the chart of the Canadian Japanese yen, and have a great evening. Bye bye now.